Hi fellow traders, I hope everybody's having a great week. This abbreviated week due to the holiday we had Monday. It's been a real quiet week for me. Yesterday I didn't take any trades. Wasn't feeling the market. NVDA was awesome. Had several people in chat take it. It just hasn't been on my radar. I usually stick to the stocks that are actually on my radar. I don't chase. If NVDA didn't come up, I didn't take it. It didn't come up for me yesterday. I wasn't chasing and didn't trade it. But those that did real well. Today, NVDA made a decent move out of the gate again. We had a few in chat that actually took it and made some money. They traded the setup that I usually trade. It just wasn't on my watch list, and my watch list frustrated me from the time I got in pre-market. There was an awesome setup on KORS pre-market. I jumped on it, made a solid move. I was able to cover half my position, and then the next candle popped, blew right past my entry, so I had to give up some of the profit that I already made to get out. But you never know what can happen. I've held and have gotten blown up, so I'm not going to hold anymore. I got out, and that kind of explains how my day was. I got in the stock, it would work, and it did. NVDA is a prime example. I got in NVDA, got about almost a 50-cent move. I was looking to cover half my position once I got 50 cents. Never did get that 50-cent move. Went back and ended up getting stopped out. I mean, that kind of explains the day. I get in, get a first cover, no follow through. Get in, don't quite make the first cover, end up getting stopped out. Just a wash day for me today. But my swings are doing good. And that kind of leads me to what I want to share with you today. Swing trading is something that I like to do more during the summer than anything else, because day trading usually slows down for me. Swing trading is a way to bring some solid profit in between the day trades. And I didn't want to bring it out early because that wasn't my focus. When earnings season comes in, I'm focusing on day trading. I may throw a swing or two in, but I'm day trading. When the summer rolls around and we're looking at the residual effects of the earnings, where we had earning winners run and get overbought, and earning losers, fade and get oversold. And I look to swing the reactions to those. And that's pretty much what I do during the summer. So I launched my swing trading the Average Joe way class to complement my day trading the Average Joe way class. And like I said before, and I'll never not say it, all of this fundamental information you can get online. You can get it for free. You don't have to pay anybody anything. So why do I do the class? Why should you pay somebody for the class and you can get a lot of information online? Well, the thing is, you can fill your head up with a whole bunch of fundamentals, but if you can't put it in action, it doesn't matter what you know. You can know everything and anything about trading, but if you can't apply the fundamentals to the market, there's nothing you can do. And that's why you need a teacher. That's why you need an instructor. That's why there's still schools. There's still colleges and universities, because not all of us can watch something or read the fundamentals and then automatically apply it. There is a small percentage of us who can do that, and it's amazing, and I applaud these guys, but most of us can't. And what the class does is, the class should be a reflection or an extension of the teacher or the instructor, where they bring their personality, their, who they are into the class, who they are as a trader, what their thoughts are, what they look for. Because trading is not an exact science. It's an art form, and it takes different shapes. And depending on who you look at, who you learn from, or who you're watching, you're going to see trading develop differently. And so for me, this is my way of teaching exactly what I do, step by step. So I want to share with you guys, I'm part of the first class, and I shared this with the members in my chat room today, and they got this, and this is the recording of what I shared with them, and I'm going to share it with you so you can really see what this is all about, and what I'm about as a swing trader. Now, it doesn't cover everything. It covers the fundamentals and how I view it, and how I interpret it, and how I apply it. Now, the class is $6.99, and it is all live classes. You have live mentoring, because if I sold you a recording of a class, and while we're going through something and you have a question, why would you need to stop and email me and wait a couple of hours for me to answer, or hope that somebody answers your question that knows what the hell they're talking about? Now, that doesn't make any sense. That kind of hurts the learning process. So we have all live classes, so that if we do have a question, if we're going through something, you can stop and ask the question, which is why I keep classes small. We don't need we can't have a whole lot of people in the class to where I can't answer or give individual attention. And that's the way my day trading classes are now. There's small classes, and there's enough people. There's just enough so that I can give the individual attention. You do get lifetime access to the class, meaning you can take a class this time, and 6 months from now, you're like, I need to go back and see what I'm missing. You can come back and jump in and take the class at any time. So you'll have lifetime access to the classes anytime you want to come back. And you also get a year chat room membership. So you could come in and you'll hear us talking about the stocks, talking about the watch lists, really getting to understand what I'm looking at. So this is all, everything that you get with the swing trading class. Now it's about 10 classes, and just like anything else, and just like when I was teaching, sometimes the class that you have may take longer to get a certain concept. So class may have to be extended. Instead of 10 classes, it may be 11 classes, or it may be 12. But we're not going to move on, and we're not going to leave anything until everybody has it and understands it and can apply what you learn. And that's what I'm all about. So I'm not going to spend any more time talking. Just sit back and enjoy the recording that I have for you. And as always, if you have any questions or any concerns, any comments, email me, ed@averagejoetrader.com. and I will get back to you as soon as possible. All right. Hey guys, welcome to our weekly education webinar. Today is what I've been promising for the last month or so. We're going to talk about swing trading. I'm going to introduce swing trading the way I do it, the way I see it. And just like day trading, there's no one right way to do it. There's different ways to approach trading, and you have to find the approach that closely fits you, your personality, and then you tweak it and you make it your own. And that's pretty much what I've done with everything that I do. And just like I said on my last video, you know, all of this information you can find on the internet. It's a information highway out there. The problem is being able to put that information into action. That's why there's a need for schools. You know, if that was the case, we could shut down all of the schools and all the colleges and just give people videos to watch. And you watch the video, take the test, and you get a degree. Can you imagine what the world would be like if that was the case? You know, how far would we be? So, you know, the reason why I did the courses, the reason why I do the things I do, number one, I'm a teacher. I come from the education industry. I know what needs to be done. I know what people need in order to learn. You know, they're different type learners. And, you know, so I can't imagine why somebody would pay $2,500 or $3,500 for videos, you know, other than they've been fooled by the people that are selling them. So anytime, and it doesn't have to be me. There are other communities out there that do one-on-one classes, that do live classes. Bulls on Wall Street is one of them. Canal does a live boot camp. They have live instructors. You don't buy a DVD. You don't buy a recording. And, you know, you just have to find the person that you connect with the best, that you can relate to the best. Because in order for me or anybody to be your teacher, the number one thing you have to do is choose us. If you don't choose us, then we can't be your teacher. We can't teach you anything. So, well, Wes, I don't mean to say you are a fool. I know why you buy the things that you buy. I know why you buy the videos. I bought the videos from Investors Underground that Nate had. They were good videos. But there was a disconnect because I'm not the type person. I need to see it modeled. I need to see success modeled. And that's why I taught the way I taught. You know, we do the fundamentals first, and then you get it demonstrated to you, and then you get your hands dirty. And through those three things, you're going to learn everything that you need to learn. What you don't get in the fundamentals in class, you may get it when it's demonstrated. And if you don't get it those two ways, you're going to get it when you get your hands dirty. So one way or the other, you're going to get it. So, you know, it's real important to me to provide you with the more focused information. The information that matters to me in my trading and in my style. So I may not cover everything that you read. You know, that's one of the worst experiences I have in mentoring is when I'm trying to teach what I do and somebody's read all of this stuff and they're telling me, well, what about this? What about that? It doesn't matter to me. So I'm not going to tell you anything about it. I'm going to tell you what relates to me. And that's what this swing trading, the Average Joe way is about. That's what day trading, the Average Joe way is about. It's about specifically the strategies that I use. And I know they work. Before I brought it out, before I shared it with anybody, it's been years of me doing it. All right, so I lost my my palette screen here. So we're gonna be stuck on the same slide all day. All right, so this is actually kind of an excerpt from the class. It's an excerpt from the course, the first class in that course. It's not the whole thing, but I just pulled out some basic information, and one of the first lessons that I teach that you really need to be aware of in day trading, in swing trading, I'm sorry. I'm going to be stuck saying my phone is talking to me. I'm going to be caught saying day trading every now and then. All right, so swing trading, and some of you may already know this, but some people may not. We kind of start from the beginning. We talk about the basics. And swing trading is a style of trading where you hold open positions overnight and up to several days, sometimes several weeks. It's not investing, but it's not day trading either. And sometimes you hear me say something like, this is like a day swing. That's something I made up. It's either a day trade or a swing trade. But sometimes I'll say day swing trade because I may manage it like a swing trade. I may manage the day trade like a swing trade because I feel that is going to give me the best opportunity to get the most out of the trade. So swing trading, it combines both technical analysis of the day trading and the fundamental research aspect of investing. So we merge the two. In my day trading, the only fundamental analysis I do is read the news. Reading the news is fundamental. It's not technical. So in day trading, that's all I use. In swing trading, you kind of marry the two a little bit more. It's not just a one-night stand like it is in day trading. The technical and the fundamentals have to come together and form an actual relationship here. Swing trading is still going to involve active position management, but it utilizes longer time frames. And to determine your targets and your stop loss levels. So that's why I'll say I'm managing this like a swing trade, because my stop is going to be a lot wider. Sometimes I feel that for a trade to work, I might have to give it a lot wider stop. And that's what I mean when I say this is a day swing for me, or I'm managing it like a swing trade. A lot of people prefer swing trading and the longer time frames because they can't stand the movement in day trading. They never can get their emotions in check in day trading. They can't deal with the swings. So it's easier for them to watch their trade on a daily chart and just eliminate all of this moving around that they see. So that may be where you fit in. You may not like day trading. You may get to the point where you say, I don't even want to, I can't be a day trader. I can't handle all of this. And that's fine. There's nothing wrong with that. You have to find where you fit in. And most traders, they do have a personal preference towards trading a particular time frame. Just like in day trading, mine is a 5-minute chart. Some people swear by the 1-minute chart in day trading. Some the 2-minute, some the 3-minute. Some trade 15-minute, a 30-minute, or even 60-minute in day trading. There's a guy, accessortrader.com. I can't remember his name, but he works off a 60-minute chart. That's how he trades. So everybody has their own preference, and your time frame has to fit your preference. But the key here is you can substantially increase your trading profits by combining the two types. A lot of people will say you don't want to combine swing trading and day trading. No, you don't combine them on the same chart, on the same stock. No, that's not what you do. You have a specific separate swing trading strategy, and you have your day trading strategy. Now, yeah, I've been swing trading a stock and day trading at the same time. AAOI was the latest one, where I had a long-term swing I was holding for a couple of days, but in my day trading account, I was day trading it and making money. So I was increasing the chance of me making profit. And especially, and the reason why I'm bringing this out in the summertime is because this is when it's going to be the most effective. Because when day trading is really busy and you have a lot going on with day trading, you're not going to focus on swing trading as much if you're really into day trading. So for me, being really into day trading, I'm not focusing on swing trading as much when we're busy. But when the market slows down, and especially now during the summer, in between earnings season, I'm going to look at swing trading some of these stocks that either blew up or sold off during earnings, because they're going to come back, and you just have to be in the right place at the right time. And to do that, you have to know what to look for. And that's what this course is pretty much all about, is teaching you what to look for, how to find the stocks, and then how to trade them. All right, so there's some similarities and differences between day trading and swing trading. So the similarities are swing trading can almost be a form of day trading that's just over a longer period of time. Because in swing trading, we're just looking for a specific strategy to complete a move. We're looking for we're looking for a setup, and instead of that same setup during the day, we're looking for it to happen over several days, and that will allow us to make a little bit more money. We still have to manage the trade. We still have to only get in when we see the setup. We just can't say, this stock looks like it's sold off, it's down, so we're gonna buy it because it's got to go up. There's a setup that you need to use so you can base your risk off of. Both look to profit from relatively shorter price action. shorter term price action compared to, the buy and hold investment strategy. You're just going to buy it and hold it for a year because over the course of the year, this company you think is going to, introduce new products, or they're going to get this, this contract or something, and you just buy it and you just hold it. Both revolve around the chart set pattern setups and technical analysis, and you can go long or short. Now, it's very difficult for us who really don't have a big account to hold a short position longer than a few days. 9 times out of 10, we're going to get bought in. And I'm telling you, most of my short positions, they ended because the broker bought me in. They bought me. They bought me out because either they needed the shares or whatever reason, they would buy me out. Sometimes you may be down too much and their risk management says, hey, we need to get this guy out of this position. He doesn't know he needs to get out. He's about to start owing us money. So they buy you in. Sometimes you've been holding it 3 or 4 days or 5 days, and they have to settle. So they buy me in. So a long-term investing, we're not going to be able to short. We can only go long. That's the buy and hold type thing. But for us, day trading and swing trading, we can go long and short. So the differences, obviously swing trading is going to have a longer holding period because we're using a wider range chart. For me, 15, 30, and 60-minute charts are intraday. Those are for day trading. Some people do swing trade off of them. Me, I just don't. I don't need, if I want to swing trade, I don't need to look at it intraday. I just look at the daily chart. If I'm getting in the stock, I'm looking at the intraday to gauge a good entry. And that's it. My profit targets are set, and I just watch the daily. And when the daily hits a goal, then I take it off. Or if it stops out, I'll take it off. If it hits my stop, I'll take it off. Weekly charts, I think, are for longer term holding and longer term investing. I don't use weekly charts. I did try to bring it in and use it to manage my profit targets, but the daily just seemed to work better for me and what I was doing. Traders looking for more precise entry and exits, they'll shift to the 1 and 5 minute charts for trade executions. I use a 5 minute on, a 5 minute chart intraday for my entries. And then once I'm entered, I don't look at the 5 minute chart anymore. I manage it using the daily chart. I'll have the levels, my stop on the daily. I'll have my profit targets. So whenever it hits my stop, I take it off. When it hits my profit target, I take it off. I can set alerts on my phone that when the price hits a certain area, say it may be 10 cents away from the profit target, the alert goes off, and then I can go look at the chart and look to get out. So when I look to get out, I switch to the intraday chart, and that's what I use for my exit. Because I might, based on the chart, I may be able to get another 15 or 20 cents, to get out. So, I switch over for my exit. But other than that, I'm only watching the 5-minute chart. I mean the daily chart. And I'm going to show you why here in just 1 second. Now one of the big distinguishing factor between our swing trading and day trading is the overnight risk that you bring in. You introduce that overnight risk into your trading. So that's why you don't want to have these huge positions, because you never know what can happen. You know, a stock can be tanking. Let's say MYL, like today. A lot of people just shorted that. They got on the short train. I was joking about it earlier. But if you look at it now, it is, let me bring this over here. If you look at it now, it's taken off. You know, it's running back up. So some people may be shorting this. They may be holding this overnight. I think, personally, this news that came out today was already priced in the stock. Because I remember this stock gapping down day after day when, you know, they got in trouble and they had to reduce the price of their EpiPen. You know, now they released the news that everybody knew, that they overcharged people for the last several years. That was already known. That's why, you know, they went through what they went through before. So, kind of knowing that, I wouldn't short this. But you could have a pile of people short on this. And then overnight, some good news comes out that, hey, this was handled in a previous lawsuit, or there was already something in place to take care of all of the patients that, you know, were overcharged or whatever. Then the stock shoots back up. If you short, you're in trouble, because if you're swing trading and short trader and you wake up at 7 and you're down 4 or 5 points, you can't get out until 8 o'clock. When 8 o'clock hits, that's when you're going to be able to get out of your position. And so you may lose several more dollars before you can get out. So that's the inherent risk that kind of comes in with swing trading. Day traders believe that the uncontrollable and unpredictable nature of an overnight event is too much risk to bear, especially since they have no access to, you know, fighting or managing the risk early in the morning, just like what I said, before the market opens. An overnight risk can be as common as a gap down in the S&P futures. You know, if you remember, I told you I monitor the futures at night before I go to bed. When I wake up in the morning, gives me an idea of what the market's going to look like today. Unexpected earnings. That's why we don't gamble on earnings. So swing trading brings in this additional risk, but that means we have to really dig deeper into the fundamentals to make sure that this is worth the risk, that swing trade is going to be worth the risk. Because technically it could look beautiful, but you know, the fundamentals could be way off. The futures market, I do not touch futures. I do not trade options or futures. Not at all. Is anybody else having audio problems? No. Oh, okay. Yeah, I think I thought I had fixed it earlier. All right, swing trading, and this is what I like too about it. It requires less up close monitoring. Now, this is something you're gonna have to get used to if you've been day trading exclusively. Is setting it and just forgetting about it, not monitoring every tick, because that can throw you out of a trade. And this is why having a full-time job or not having market access throughout the day, this is a way you can get into trading. You can start learning the market, understanding what makes stocks move, until you have time to start looking at it full time. Traders who have a more passive temperament, or like I said, who just can't control themselves, it's swing trading is for those. That's where swing trading comes in. Now, if you can't control yourself swing trading, then you probably want to think about another profession or another way to get away from your 9 to 5. Is you're going to have to be able to control yourself at some point. Swing trading also costs less than commissions due to the smaller frequency of trades compared to day trading. Okay, swing trades may total just a few traders per week compared to the tens of hundreds of trades that an active day trader may execute. So if you have problems over trading, you probably want to start looking at swing trading. Also, there's some that don't meet the 25K minimum. And let's say you have $15,000 and there's no way you want to put it in SureTrader and you want to trade. Well, you need to look at swing trading. If you can open a broker, like if you go to IB, I'm not sure what Lightspeed minimum is, but if you go to a broker that you can put 10 or 15 grand in, swing trading is probably the only thing you're going to be able to do as far as trading stocks. So, swing trades, they bypass this PDT rule because you hold your positions overnight. You may buy a position today and you sell it the next day. You may buy a position, 2 positions today. You may sell one the next day, sell another one 3 days from now. But in the meantime, you did get into another position. And you can continue doing that. You'll be able to eventually trade your way to out of the PDT, from under the PDT rule. All right, swing traders can take advantage of larger price moves. Stocks that run multi-days. We may have a stock that runs up. That may target, you may hit several of your target points that you wouldn't be able to hit during the day. Whereas day traders, we may only look to get 30, 40, 50 cents. A swing trader, we may be looking for 2 or 3 points over the course of a week. So, and here's where the largest stop losses come in. In order to get those big moves, you're going to have larger stop losses, which means when you swing trade, you may want to swing trade with a little bit smaller share size. Because if you're going to have to give a stock 1 or 2 point, move, a 1 or 2 point swing, you're not going to want to put 300 shares on it or 500 shares on it. You may only want to put 100 or 200 shares. Yeah, you're not going to make as much, but you're not going to lose as much either. And then as your account grows and you're able to risk a higher percentage, or you still risk the same amount of percentage of your account, but that is higher because your account size is getting larger. All right, so we're going to get into the lesson. I covered some of the basics, and like I said, that's not everything, but I just kind of watered it down a little bit from what I go over in the class to kind of give you an idea, a good, base for where I'm going and what I think about swing trading. All right, so the first lesson, this is the very first lesson that you have to learn in swing trading, is to understand the market cycle. One of the most important rules that every trader should know is the longer the markets trend and exhibit one-way momentum, the higher the odds that a range-bound period is going to approach. So how do you determine whether the market is trending or whether the market is range-bound? That's kind of a fine line. But you have to analyze markets using the 4 phases that they go through. The stock market cycles through 4 phases constantly, consistently. The market and the stocks that we trade. Now, to swing trade successfully, you have to understand the 4 phases that the market goes through. These phases are going to tell you when you need to be long, when you need to be short, or when you need to stay in cash. And like yesterday, I didn't like the way the market was trading. I stayed in cash. Today, I thought it was going to be a little bit better, but I should have stayed in cash today and just stuck with the swings. But, once you're able to identify what phase the market is in or what phase your stock is in, then you can try to trade accordingly. You can build your trade plan around that. So the first phase we're going to look at is phase 1, and this is right after a downtrend. Here we have this stock is sold off. We've been in a downtrend, and now here we're basing. We're starting to slow down and turn sideways a little bit, and not often do we get an abrupt gap up. But in this case, we did get an abrupt gap up. But in a lot of cases, we kind of slow down in phase 1 and trade sideways a little bit before we start gradually pushing back up. So this stock has been going down. It's starting to form a base, or trying to form a base here. Even though we're still trending down, we're not trending down as much. The candles are getting smaller. We're slowing down. And we're going to base here. Then we get a gap up. The sellers that had the upper hand here, they're now beginning to lose their power. You can see here. They didn't so much lose it here, but this is a kind of a neutral candle. And, here. The stock can drift sideways, or it can start to slowly reverse. Or you can see it just gaps up. But when it gaps up, it does give us an opportunity because we're moving into phase 2. So when it's down here, that's not where we look to enter positions. If we're a day trader, yeah, we may enter positions down here because we're not looking at the daily chart. We're looking at the intraday chart. And this may have been a gap down here, and it was on our scan, and I may be looking to trade it for opening range trade. But as a swing trade, I will not trade it. So how does my day trading and swing trading merge? Let's say I traded this stock today. I look at the daily chart and I'm like, hey, this thing may be bottoming. We may be starting to make a move up. So depending on if it's oversold and other factors, then I may consider taking this to the long side for a swing trade, especially after a long downtrend. So the next phase, is phase 2. And this is where we get the breakout, or we get the reversal move, the follow through on the reversal. This is where most of the money is made in the market. In this phase, and I say most of the money is made in this phase because most of us can't hold phase 4, the short. We can't hold it for a long period of time. So we can hold longs practically forever, but we're limited in how long we can hold the short. So no one believes that we're rallying here. Everybody still hates the stock. The fundamentals may still look bad. We still may have negative guidance on this. Nobody believes it. But when we're looking at this and we understand the cycle that stocks go through, and we know how to gauge, set our risks so that if we're wrong, we're not going to get hurt. We can take this trade and we can hold it, and you can see this had a 7-day run up. So we probably would have sold it after 5 days or so. Especially on this gap down, I would have dumped it, especially if I had all of this. But the key is, we understand the cycle. And that's where professional traders come in. They're accumulating shares and getting ready. They're buying up here and they're getting ready to dump it to these guys who are clueless. And that, this used to be us when we first started. We were the clueless ones that were getting dumped on. We see this big run up and we was like, man, this stock's going up. I'm going to get in. And then the day that we get in, it goes down. Or the next day, it starts to go down. Because we didn't understand what cycle we were in. All right, phase 3 is where the stock begins to trade sideways again. It may be range bound a little bit. And this is where we start to get in. When we were newbies, we would get in here. We'd be like, oh, here's a pullback, man. I'm going to get in this. And we get in and we want to hold this for the break. The next day comes and bam, sell off right back to our entry. And for me, that's out. I'm out. So the newbies, they're getting in and they're getting hit. They didn't realize that we were running into a supply zone. But yet we knew. We knew about supply zones because, we go over drawing our levels. We respect our technical levels. So we knew we were hitting a supply zone. The newbie doesn't. And they're getting in, thinking that we're going to continue to go higher. And then once we get up here, the buyers and sellers start coming together again, And based on who wins or loses, that's going to determine whether we're going to continue a phase 2 or whether we're going to enter phase 4, which is this massive sell-off. Okay, the stock always slows down when it gets to this level. It starts to slow down. And then it could trade sideways, or it can take the breakout. All right, phase 4. This is the dreaded downtrend. This is when people who held on to this and were holding on to their hopes and dreams, looking for the next big home run, this is where they start to get burnt up. Because fundamentally, the stock may still be good. No bad news may not have come out. But they don't understand there's a supply zone here. They don't understand why there's a supply zone here. And they may not understand what a supply zone is, because the DVD that they got is only teaching them, how to a candlestick pattern. They're not teaching them about supply zones or anything. They think that the downtrend is just a correction. Wrong. They hold and hold, hoping it will reverse back again. And, they're in bad shape. This here could give them some hope. Because you see, we're basing here. They could say, oh man, we're getting a phase 1 here. But no follow through. We did get sideways, but it kept going down. And then we finally get a base and we start to push off again. So these are things that we have to look at when we're going to swing trade. Number one, we need to understand what cycle, what phase the market is in, or the stock is in, that we want to trade. What's wrong? Oh, I thought you needed something. All right. Does everybody understand what the 4 phases are that we talked about? It's very important that we are able to identify this. Because these phases, they occur in all time frames on every chart you look at. When the market or your stock that you're trading is chopping around here in stage 1, don't get in, because you don't know what it's going to do. Here somebody could have gotten in here thinking that, here we're in phase 1 again. Now we're going to start to ramp back up. They get in, and there's nothing, no setup here. Nothing at all. If anything, you're forming a descending triangle, which means you're going to get short. You need to get short here. Because if we go back and look at this, what are we forming here? This is bearish. This isn't bullish. So, that's why we have to learn these, understand these stages. In stage 2, if your stock is in stage 2, I'm not going to be shorting this unless it's got a real bad catalyst somewhere. I'm not going to short this on a swing trade. I may short it on a day trade because that's what's happening that day. But if I'm looking to swing this, there's no way I'm going to short this. Not when we're in phase 2. In phase 3, this is where you want to be all cash. This is where you want to have your money in your pocket or in the bank. You don't want it exposed to the market at all. And in stage 4, you want to aggressively focus on short positions. Now, these phases you can use, but only in, let's say, no more than 2 weeks at a time. I don't hold it for more than a week most of the time. So I don't want to use these. These phases are usually good for 7 to 10 days at the most. Now, yeah, some of them can continue to run and run and run. And if it does, you trade accordingly. You know, typically I'll get out and then get back in. But I will lock in my initial position. All right, so let's look at my daily chart here let's look at some of the swing trades I took that I actually told you guys about. I purposely was not saying anything about swing trades that much because I know I hadn't talked about it and I wasn't in a position to where I could really share my strategies. I didn't have it all down on paper. But until I can and present it to you in a certain way, I can't do it. I couldn't put it out there. I need to find my daily chart. Here it is. Alright, so CAR, again, I think I showed you this before. I'm going to remove all of these lines. I don't need to keep these up here. Alright, so when you see, this is where I was looking at it. Here's the long downtrend. Okay. Here was okay, here was phase 1. Hold on, I need to take this off. It's snapping. It's not allowing me to draw a straight line. Alright, so here's phase 1. Okay, here was a long downtrend. This is the phase 4. This is where you would heavily be short. Alright, so here, this to me, this was the beginning of phase 2. And so once we got this move, I was like, oh yeah, this is nice. We're starting to bounce here. We were oversold. You know, and there's some other parameters that, you know, I teach that I use in this. You know, but for them, you know, for purposes of today, I'm just showing you kind of the basics. But this is what I saw. I saw we slowed down here, and once this candle opened above the close of this candle, even though we sold off a little bit, we held it. So I knew this was probably the start of an uptrend, and that's what made me get in on this day. That's what made me buy this day, and I bought it expecting to hold it. And of course, I found out that this was a pump. And whenever something gets pumped, it's going to come back. It's not going to continue to move because the move is based on false pretenses. And so once I realized that, I was able to get out. I was able to lock in the profit, but I was able to get out before it went through this phase. Now, obviously, I might have gotten stopped out on this day had I still been in this trade. But you can see there's really no setup here. As far as I'm concerned, if we're looking at this, we're trading in a range here. So as long as we're in this, as far as a swing trade, this is considered no man's land because I don't know where it's going. This will be 50-50 for me. I don't know what it's going to do. Yeah, here we've gapped up. I don't know. Tomorrow would tell me whether we're going to keep running up. But, here's some resistance here that it's going to run into. So I wouldn't be comfortable taking this, and I wouldn't think that we are in stage 2 until we get through this. Once we get through this, then I would be confident that we're in stage 2. But as it stands right now, it's in no man's land. This is kind of choppiness to me. Even though today we opened up with a little gap, and pulled back and we held it, I'd still be concerned. I would need to see the next day open. The other one, TSCO, I'm still in this one. Okay, now this one had a little hiccup. Yesterday and today was a big hiccup. But I'm not watching the intraday price action. If I was watching this intraday, let me see if I can grab this over here. If I was watching this move intraday, don't you think I would have got out? Oh, that's the wrong one. Hold on. TSCO. Here we go. Don't you think I would have gotten out of this trade if I'd have been sitting here watching this intraday? The average person would be with that day trader mentality would come in, and it'd be like, if I'm long, as soon as I lost all of this, I'm out. Well, with swing trading, I'm not trading off of the VWAP, the 9 and 20 and all of that stuff. I'm not trading off intraday stuff. And you can see this made a big move down. It closed green on the day. It closed green on the day. So I'm still in the trade. I'm still locked in. Still looking for the push through this 55.30 level. And see, we tapped it the day before. See, we tapped it 55.30 the day before. Now, I started to take profit here, or to take some off here, but I didn't. When it hit this, I was watching it on the daily chart, and I watched it touch this on the daily chart, and I was thinking, do I need to take profit here? And I convinced myself, no, that we're probably going to push through this and base on top of this today. But you can see what happened. It pulled back, so I just had to let it go. And then, yeah, I was concerned when I saw this morning. But I'm looking at a daily chart. And I'm looking at, okay, I base my trade off of this level. So this has to close below this level at the end of the day for me to take this trade off. I'm not going to take it with it tapping here. And This candle was red all day except for like the last hour, hour and a half. But not managing this intraday is going to allow me to possibly get bigger moves. I'm looking at this coming back to possibly the 20. If not, in the $56, $57 range before we pull back. Now, any catalyst can come out. Tractor Supply could announce a partnership. Or they could announce a big contract or whatever. They could announce it. And then all of a sudden, the stock flies up. So I'm in good shape. Or they can have bad news come out and the stock can tank overnight. Nope, I do not put in hard stops. No, Dustin, you can't look at after hour spreads. You're not. What happens when the market closes? The spreads are going to go haywire because people are pulling their orders. Or a lot of people have orders that cancel on market close. So you're going to have these big gaps. So none of that really matters to me because that's not legitimate trading. And that's why you can't look at that. You can't look at any intraday charts and worry about any of that stuff. Because when it opens tomorrow, you're not going to have that. I guarantee you if you wake up at 7 and RL is trading at 7, well, RL doesn't usually trade that early. They usually won't trade until the open unless something's activating it. But you don't even let that bother you. Only thing that bothers you, only thing you need to be concerned about is where the spread is and what happens at the open. If it's gap down, if you wake up and you see your stock that you're long on the gap down list, then that's when you need to be concerned. Other than that, I wouldn't worry about it. I manage my risk. My stops are going to be based on the strategy that I trade. It's going to be different for the different strategies that I trade. Sometimes it may be based on a level. Sometimes it may be based on the low of a previous candle. Or, the base for phase 1. It may be the base of that. It may be the average true range. I may use it to help set my stop. But I do not use hard stops. And like Louise says, stops do not work overnight or pre-market, or anything. I have alert on my phone that if it hits a certain price, then it's going to alert me, and then I can go look at the chart and determine what I need to do. If it closes, like if I have a stop, let's say, for instance, let's look at TSCO. Okay, my stop on this was a close back below this 54.12 level. Now, I knew, even though I'm in at 54.23, and if it closed at like 54, I would still take it off because technically this trade is dead. Now, it could open tomorrow and gap up and keep going up, but the likeliness of it doing that is slim to none. It's more than likely it's going to pull back and retest this level here before we may get another bounce. But if it does that, my trade plan is dead. That's not what I'm looking at. But even though it dipped down below it today, my alert went off. All that did was alert me to, hey, at the end of the day, you need to check where this stock is. But I did look at it to make sure it wasn't a massive sell-off. Because I do have the daily charts up on my other platform. I got another computer that has my swing stuff on it. And I have my daily charts up on that computer. And I am looking at the daily charts whenever something hits. But yeah, you're going to have to be comfortable with more risk. But the strategies, as long as you have a good strategy and you trust your ability to read a chart and to understand how stocks move, then you're going to be fine. And just like anything else, just like a day trade, there's no guarantee that the stock's going to work out. There's no guarantee. The only thing we can go by is the setup that we used. And the way I found this, I have an oversold strategy based off of earnings losers. And I have an overbought strategy based off of earnings winners. Those are two simple strategies that I use. And I have several. I have more swing trading strategies than I do day trading strategies. But I don't swing trade as much. I'm only in one, no more than 2 swing trades at a time. Because here I still have to manage risk. What do I think of X or AAOI for swings? I would be swinging AAOI short if I had shorts. If I could find shares to short, I would have been shorting it. And it's funny you should mention X, because this, let's see. I hate this when it does this. It drives me insane. Hold on a second. I have to switch. This is actually X. The example that I used. So X is a better swing trader than it is a day trader to a certain extent. And you can tell by the chart that it's a better swing trader than a day trader. How do I know when to take profit? Like I said, I try to look for at least 5% move in the trade. Based on the setup that I have, I should get at least 5% on the trade. Sometimes I may get scared and take half off before. Like I almost took some off yesterday here at 55.30. But I do look at the daily levels, the daily pivot points, because obviously they're going to be respected at certain points. And I look at, I want to get a certain percent gain. Because if I swing trade a stock for 2 or 3 days and I only get 2%, that doesn't make sense. I've got too much risk out there just to make 2 or 3%. That's not what I'm looking for. So I'm trying to get at least 5%, looking anywhere between 5 and 10%. But yeah, X. I mean, I love trading these earnings losers that sell off. But see, this is a real choppy chart. This would be difficult, really to trade here. Because we really didn't get a base. We just had one candle to hit this and then bounce. So I don't really like to see this. I like to see it in an actual slowdown. 2 or 3 candles slowing down as it hits a support before it bounces. And this was just, pretty ugly. And then we had the 20 moving average too close. There wasn't enough room for profit here for X. That would be the first thing I would look at. I couldn't get between here and where the 20 was. I couldn't get 5%. So I just kind of stay away from it. But like I said, there's a lot to learn in swing trading. But once you get specific and you start looking for specific patterns, like when I first started trading, swing trading, the only thing I looked for was ascending or descending triangles. That's all I looked for. So I did a scan for that. And I brought up the daily chart and looked at them. And if I liked it, that's great. If I didn't, I moved on to the next one. So I had ascending triangle, descending triangle, and I just had a triangle, I think, yeah. And what I did was, well, you can barely see it. I have to go in and change all of the colors, but I guess you can see it a little bit. You can see it a little bit, but here's a triangle here. Then I would look to see, when it broke out the triangle, I would depending on what direction it broke, that's where I was gonna go. We tried to push up, we couldn't. This gap down below the 20, here's my short swing entry here, and a close over the 20 would stop me out. A quick small stop, and I'm looking for this huge move down out of this triangle. I mean, that's just simple stuff I used to look for, and I still do. If I see one, I lick my chops, I'm gonna jump on it. As long as I can manage my risk, I'm gonna go for it. I believe you can with trade ideas. I haven't done it with trade ideas, but I'm pretty sure you can. Because I developed this before I started using trade ideas, I never went to using it. I'm a kind of a creature of habit. I'm gonna stick to what works, and that's what I've been doing. All right, guys. So I hope I answered some questions about, where I'm coming from with my swing trading. This is kind of an excerpt of what, I cover in the course. Obviously, I go into more detail, but I just wanted to give you an idea so that when I'm talking about these swing trades, you have an idea of where I'm coming from. Or if I'm talking about, I don't like it because we're in phase 1 or we're in phase 3, I'm not going to touch it. Oh yeah, on FinViz you can. I mean, that's what I use FinViz for my swing scans. The class will start in a couple of weeks, depending on how soon I get the seats filled. I mean, I'm not going to wait until I fill all the seats, but once I get enough people signed up, we're going to take off. Just like I did with the day trading class. Once I got enough signed up, I started the class, and then when I had more sign up, I started another class. So I've got 2 day trade classes going on right now. One is kind of in its final stages, so I'll be starting up another one when we get done with it. The swing trading class for the yearly subscribers. The swing trading class for you guys get a $200 discount. Is $299. I mean $499. If you are taking the day trading class and you want to add the swing trading class to it, you get that extra 100 off as if you would have bundled the 2 together, which is $399. No, we don't cover swing trading in the day trading class. Those are 2 different strategies, 2 different schools of thought. And the reason why you guys, the people in the community, you get a discount on it because you already have a chat room membership. There's no need for you to pay twice to get a lot of the stuff that you're already getting. But you can take a look at on the website, AverageJoeTrader.com. And that'll give you, everything you need. I'm not going to make a commercial here. That's why I don't have, all of that information up here on the slide. I didn't want this to turn into a commercial, so. Yeah, I announced it this weekend when I did the video. On the weekly recap video I did, I announced it then. And then I was going to announce it here today too. But if you want to sign up for the class, you guys will need to send me an email so I could send you the special link / invoice because I'm not putting your price up on the internet, because I'll have people trying to sign up using y'all's price. So I send you guys a special link specific to you, and we take it from there. So if you decide you want to take the swing trading classes, let me know. Just email me and I'll send you the link.